Today we'll do cash flow statements and we'll take up some questions. The first one in cash flow statement is cash flow from operating activities. Now in cash flow from operating activities, the very first step that has to be done is determination of net profit, right, before tax and extraordinary items. Now this determination of net profit before tax and extraordinary items is basically the beginning, the starting from where the other things will come. So first of all, you should understand how to calculate this net profit before tax and extraordinary items, right? Now I'll put down the formula here. Now first of all, you take the difference between the closing balance and the opening balance of the statement of profit and loss, right? To this you will add. Now what are the items to be added? Just see. Proposed dividend of the current year should be added, right? Then the next thing you will add is interim dividend paid during the year. Fine. Deferred tax liabilities are to be added. Net deferred tax liabilities are to be added, right? Then whatever amount is transferred to the reserves, that is added over here. Provision for expenses, provision for tax for the current year, extraordinary items which have been debited to the profit and loss account, right? Now these are the items to be added. Now let us look at the items which are to be deducted, right? So in this deferred tax assets, the net deferred tax assets will be subtracted. Refund of tax credited to the profit and loss account, this will be deducted, right? And extraordinary items credited to the profit and loss account. Fine. This will give us the net profit before tax and extraordinary items. Okay. Now let's take up one small question. Now supposing you have been given the balance sheet . Following is the balance sheet of XIZ Limited, right? Now the balance sheet, let's say, is this. liabilities, and the year is given here, 31st March 2012 and 31st March 2013, right? Now here, the first thing has been given, statement of profit and loss. Here it is 6 lakhs and here it is 9 lakhs, right? Then the next one is proposed dividend. Now proposed dividend is given as, let's say, 2 lakh and 2,50,000, right? Then we have dividend payable for the current year. We take it as 30,000. This is the balance sheet that is given. Now show how these items will appear in the cash flow statement, right? Now the first thing that we have to do is we have to take the difference between the closing balance and opening balance of P&L account, profit and loss account, right? That comes to how much? 3 lakhs. 9 lakhs minus 6 lakhs, right? Now after that, proposed dividend for the year. Now here we had put this proposed dividend for the current year, right? Now what is the proposed dividend for the current year in this case? The proposed dividend for the current year is 2,50,000, right? So this 2,50,000 will be added. Add proposed dividend for the year, right? That is how much? 2,50,000. So that comes to 5,50,000. This is the cash flow from operating activities, right? Now this dividend payable will not come in your operating activities. Dividend payable will come in the financing activities, right? So as far as cash flow from operating activities is concerned, we will put it as 5,50,000 only, right? Now in this case they have given the proposed dividend as 2 lakh and dividend payable as 30,000, right? Okay. Now if you want to see this one, cash flow from financing activities, right? Now here this dividend payable will come. Basically dividend payable is given as 30,000 and proposed dividend is given as, see this dividend payable 30,000, this is the dividend payable of this particular year, 31st March 2012, that is 2 lakh. Out of 2 lakh, 30,000 is the dividend payable, right? So that means here you will have final dividend which is paid. Final dividend paid will be rupees 2 lakhs minus that 30,000. So that comes to 1,70,000, right? So this 1,70,000 is the cash flow from financing activities. So we have been given 3 items and we were asked to show the effect of these 3 items. The first 2 items, statement of profit and loss and proposed dividend, will come in your cash flow from operating activities, and the next one, dividend payable, will come in the financing activities, right? Okay. Now let's take up one more question for this cash flow from operating activities. Now supposing I have this, following is the extract of the balance sheet, right, of T&T Associates, right. Now here you have been given the balance sheet, liabilities, let's say 31st March 2012 and 31st March 2013, right. Now here equity share capital is given as 7 lakh and 7 lakh, right. Then you have 15% redeemable preference share capital, 3 lakhs and 3 lakhs, right. Okay, then statement of profit or loss, $1,50,000 and let's say 3,50,000, fine. Proposed dividend on equity shares, okay. So that is 1,50,000 and 1,80,000. Okay. Dividend payable. Dividend payable is given as, let's say 40,000, right? Now that is all. Only this much information is given in the balance sheet. After that, you have been given some additional information. Now this additional information, the first one, final dividend on preference shares is 50,000, right? Interim dividend of rupees 40,000 on equity shares were paid on 31st March 2013, right? Fine. Now from this you have to calculate the cash flow from operating activities. Okay. Now let's do this. Now first of all you will take the difference of profit and loss account, right? Now if we look at this, this is statement of profit or loss, 1,50,000, 3,50,000, right? So that comes to 2 lakhs. So here I'll put the amount as 2 lakh. Fine. After that, proposed dividend during the year. Now proposed dividend is given here. Proposed dividend on equity shares during the year is how much? 1,80,000, right? So here we will add that, add proposed dividend 1,80,000, right? Then additional information was given. Dividend on preference shares. Final dividend on preference shares 50,000, right? Okay, that will also be added. Dividend on preference shares, that's how much? 50,000. And then the next additional information said an interim dividend of rupees 40,000 on equity shares were paid on 31st March. So during the year it has been paid. So here we will add this interim dividend on equity shares paid during the year. Fine, that is how much? 40,000, right? So that will also be added. Fine. This dividend payable, as I told you, is not something which is a part of this operating activity, so we will not take this. So now what is the total of this? 2 lakh plus 1,80,000, 3,80,000. 3,80,000 plus 50,000 is 4,30,000 and 4,70,000, right? So this cash flow from operating activities is 4,70,000, right? Okay. Now this is one of the starting point for all your cash flow from operating activities. So in the next session we will look at some other things, some other adjustments to be made, like depreciation, right, and your non-cash expenses and all such things, right? So for this session, I think this much is sufficient. Now you have learned how to find out the cash flow from operating activities in the statement of profit and loss, proposed dividend. So this formula, this is what we have done, and this is basically the calculation of net profit before tax and extraordinary items. Here I have written this. This is determination of net profit before tax and extraordinary items, which is the first step, right? This is the formula for that, right? And we have taken up some 1 or 2 questions on that, right? So in the next session we will do something further on this cash flow statement.